So today's special segment is a few characteristics, sort of an introduction to what's special about euro-dollar. Okay, euro-dollar, first and foremost, it's the world's most popular currency pair, but not necessarily the most important one. Sorry, the most predictable one, not the easiest one to trade. Clearly the most important one. US economy is number one. Europe is, the Eurozone is number two, neck to neck with China at the moment, but still the Chinese yuan is not as tradable, not free floating. So it's the euro versus the dollar, also highly populated areas. It's the most important currency pair, and it has too many moving parts. Okay, every political, big political theme impacts this pair. Every significant event in the world has an impact. Another characteristic is that that data comes out from 19 different countries. Of course, not all countries are as important. With all due respect to Malta, we don't talk about Malta. Figures from there are not that important. But we know that countries like Cyprus, for example, which is also a very small one, has a lot of impact. And Greece, 2% of Eurozone GDP, has been in the headlines many times. So we should look out for data, political events from many countries. This also makes things very complicated. That's, of course, with the euro against all the rest, not only against the US dollar. But another thing to watch out for is that it's a relatively new currency, of course. It exists only since 1999, and in pockets of users, consumers from 2002. Okay, another thing that is usually forgotten and is that the trade balance is positive. I mean, all things equal, if you wouldn't have speculation in markets, we would have the euro rising against the dollar until we would reach some kind of balance. Why is that? Germany, it's mostly Germany, not only Germany, the big exports to China keep the trade balance positive, a big surplus. That means, so there's money coming into Europe. And that's very different from, there's a big difference to the United States. In the United States, well, for long years, for something like over 40 years, there is a trade deficit, okay? In the US, there is a trade deficit of about 40 billion, and the Eurozone has a trade surplus of 20 billion euros. Okay, it's not only against one another, but it's still of high importance. Okay, that means what keeps, what pushes euro-dollar down is, of course, speculation. And in the past 2 years, it's been monetary policy divergence, okay? But it's speculation about the future, not only the current divergence. So if the Fed takes a big pause from raising rates, we could see the trade balance coming into effect once again. If the ECB finishes its monetary policy, and it's close to the end, more stimulus, then again, we could see the natural thing for euro-dollar is for it to go up. The big divergence in the past 2 years or so, and it's now been 2 years since that peak, since we had 140 in euro-dollar, is, so it's monetary policy divergence against the natural imports and exports which move the pair, okay? Technically speaking, euro-dollar, in my opinion, from years I'm watching the markets, trading and then writing articles and getting my nose glued to the screen, there are too many fake-outs with this pair. Again, the world's most popular currency pair, technically as well. Lots of orders, lots of liquidity, lots of technical lines. It sometimes looks like modern art, sometimes complicates things. Lines can become and things can become harder to trade, okay? So when we do have more directional trade, and look, in the past month, we are seeing an improvement. Each time the pair falls a bit down, consolidates, and moves a bit lower. So perhaps what we're seeing now is not the best example of what I'm saying. But for me, this is the exception, not the norm, to have this nice technical behavior, okay? But once again, if you trade the pair quite frequently, and probably know your levels, know where to put the stop loss points, take profit ones. And in addition, it's the world's most popular currency pair, and this makes brokers offer low spreads. I mean, probably low spreads because liquidity is high, and to attract new clients, it's easier to say, okay, we have very low spreads on the most popular currency pair, and if you want to trade another one, of course, spreads are higher. So you can have trade sort of with very low spreads. You can gain a pip here, a pip there, without having your profits erased by spreads. Okay. Comments about this? Yeah. Okay, so Fabian thinks is the most technically reliable currency pair. I usually like the Australian and New Zealand dollars. Yeah, so evidence. Well, I didn't prepare evidence for today, I'm sorry, but well, we can look at this movement here. Sort of each time the pair is moving just a bit higher to fall down, okay? Well, let me... I would call this quite choppy trading. Not your classic range trading. This area right here, okay? Digging a bit lower, moving a bit higher. And this false breakout right here. Okay, again, it's not what we always see, but I'm okay. So Cyric agrees with me. Anyway, of course, there are, and everybody can have different opinions. And again, things are not always the same. So if a pair is trading in a nice manner for some time, it can change afterwards. Okay. Yeah, trapping traders, stop hunting. That's my sense as well. But I'm not. Again, sometimes we have nice technical behaviors, and some traders like Fabian, well, yeah, know how to trade this pair and take advantage of the of the times when the pair moves nicely, right? Okay. Yeah, Ed says, my experience in the past few years is the euro-dollar likes 50% retrace. Okay, that's an interesting pattern. And you sold the last rally. And Fabian says, in that case, what pair is better than euro-dollar regarding not having false breakouts? In general, I mean, it's a question to Cyric, but I'll answer it as well, is that and the Australian and New Zealand dollars in general, usually, not always, have nicer patterns, okay? But things change. I publish every month this list of most predictable currency pairs, and things change, of course, all the time. Yeah, every pair has its own personality. Yeah, but anyway, this is, of course, my opinion. Whatever works for you. If you like Euro Swiss, which I personally dislike, and it works for you trading the small pips in the range, go for it. If you like euro dollar, go for it. If you like the Aussie, go for it. Of course, it's an opinion. Yeah. Okay. So that's the special segment about euro dollar. If we could talk, of course, hours about